Hey, how's it going, guys? Chris here. Today we're going to be talking about the RBA and rate cuts. And not to spoil it for you, but you probably already know, the rate cut did not come in as expected. They were expecting another 0.25% rate cut, but that didn't come in. And let's talk about it.
I'm Peter Overton, coming. Here's Nine's finance editor Chris Kohler. Chris, last time there was talk of a double rate cut. Could we see that today?
Well, afternoon, Pete. We were certainly being told over the last few weeks to expect an interest rate cut. That is one rate cut today. But that was the surprise last time from Michelle Bullock that the double rate cut is being discussed. We'll absolutely be asking her this afternoon at the press conference about whether or not that is still the case. But this interest
on hold,
rate...
Chris, on hold.
Oh, that is a big surprise.
On hold.
OK, Michelle Bullock has decided to hold fire. Now, the reason that is going to surprise so many people out there, not only because the market was fully expecting a rate cut and pretty much all major economists were expecting one too, but inflation has now come back down to well and truly within the target band. GDP growth is now slowing. There's nothing really in the next 5 weeks in terms of data that's going to be a reason to be waiting. This is a sign of some real caution and a wait-and-see approach from Michelle Bullock. People are going to be very surprised here.
A lot of economists will be surprised more than anyone.
Bit of egg on face here.
So I'm just called that 3.85% in terms of, I get that off the official Reserve Bank of Australia website, 3.85%. The next update is on the 12th of August, so the next 6 weeks is going to be fascinating to see.
See, a lot of people... I've been talking a lot about how cost of living and, trying to get into the housing market, especially as I'm a younger person, and it's a real struggle right now. What does, a 0.25% rate cut actually mean for people? So for your normal person, that's probably, an extra $50 a month that they will save. And, $50 a month might not sound like a lot, but when people are really struggling to get by, I'll show a video a little bit later on in today's episode where, it does add up. And especially when people are, really working like multiple jobs just to stay afloat on their mortgages, $50 would add up. We just did a video where the council is increasing the rates by $1,000 all in one hit, which only works out to be $20 a week. A rate cut would help that $20 a week quite significantly. That would be over 50% of that bill, and that's the way you got to look at it. That $50 or $150 for your big spenders isn't a lot of money in a monthly basis, but what it does, it maybe covers like a bill in that month, and that's enough for a lot of people to maybe start to ease off the gas pedal a little bit. Like it's not enough to completely have a sigh of relief, but it's something, right? And for people trying to get into the market, it obviously helps them have a bit more affordability. But that's the problem. Like, people might actually take that as like, oh, the rates are going to stay at this rate forever, and people overstretch themselves, and then that's when they become, regretting their house purchase, as we've discussed as well on this channel.
In terms of speculation from economists after being called out today.
There's going to be some real questions being put to Michelle Bullock and the Reserve Bank board as to why they are holding and waiting when we know that Australians are expecting rate cuts. We're expecting these tight monetary policy conditions to be eased now that we've vanquished essentially this inflation demon that we've been battling. Now, not only were the big economists expecting today to be an interest rate cut, but they were expecting multiple rate cuts for the rest of this year, anywhere between 1 and 3 more on top of today. So now they're really going to have to go back to the drawing board and decide, what is Michelle Bullock's game plan here? What are we doing?
And what's also interesting, in the news last night, Chris, we had the story of people who have already factored in an interest rate cut today into homes that they've bought recently.
A little bit hot under the collar, I would have thought.
Yeah, if people are actually doing that, which obviously they are, because someone just said that, that's pretty crazy that, you're potentially buying a house that you've stretched yourself. You maybe can't really afford it, but you're assuming, the rates are coming down 3 or 4 more times this year. And when that does happen, you're more than capable of affording this house. And that's crazy to think about, that people are taking this guidance that economists and everyone's, giving out, which, you should be taking that into consideration, but you shouldn't be taking it as gospel that a rate cut's coming and that you're going to save money on your mortgage, which you are, you're stretching yourself on. It's crazy.
You've gone extra hard on Saturday at the auction with the expectation that you're going to be paying 25 basis points less after today's interest rate meeting. Look, I think it's reasonable for those people who've been to be making that assumption. After all, we've been told this is definitely happening. And this is the risk with monetary policy's decisions. It's never a sure thing, is it?
Well, Chris, you've got to head to the centre of Sydney now for the news conference.
Now that's it for that one. So let's get on to this next video we got here.
Economists had backed in the rate cut as a short-priced favourite. From 3.85% headed to 3.6% until it vanished.
The board decided to leave the cash rate on hold.
The board's statement noting uncertainty in the world economy on Trump's...
I guess that's the problem, right? There's so much uncertainty, especially with Trump's tariffs. Will that, create inflation? And then with this interest rate cut, does that create more inflation? And at the end of the day, that's what they're trying to fight here. But inflation is within the target range, and GDP is actually slowing. Like, we're almost entering a recession. We almost need people and the economy almost need this rate cut to actually be able to survive. And it's crazy. It's crazy that the world is in this situation. But yeah, there's just so much greed pushing on. And like the other thing is, even if this rate cut did come into effect, the banks don't pass it on. They're very greedy with that. They'll pass on any rate hikes, but any rate cuts, they're going to be a bit more conservative on.
Tariffs, trade policy developments are expected to have an adverse effect. And
we don't want to end up having to fight inflation again. We want to make sure we've nailed it.
This is a direct consequence of Labor not being able to manage money.
There will be millions of Australians around the country who are desperately hoping for more rate relief today.
For Rachel Ballantyne, a rate cut today would have made the home market she's been hoping to buy into for a year now more affordable.
Although the money is sitting there, the market sort of got out of reach of what you could borrow.
Had a 1/4% cut come through, those on...
Yeah, so, an average mortgage these days is realistically $750,000. So, you're looking at $113 saving monthly. That's over $20 a week, though. You're saving. Which is, it helps. It helps. It pays for a meal. It pays for a bill. It pays for so many things, that little bit of extra money, or it goes straight on to paying off that mortgage a little bit faster. So, for people to say, 0.25% of a cut is not a significant amount. For some people it is.
Mortgages would have pocketed significant monthly savings. Gone for now, though the Reserve's governor hints it's still in the pipeline. Today's pause...
About timing rather than direction.
For the first time today, the Reserve Board has confirmed how it voted.
It's crazy to think that...
in the pipeline. Today's pause...
About timing rather than direction.
For the first time...
So 6 people wanted rate cuts and 3 didn't, and that caused it not to be a rate cut. I guess they have to be pretty unanimous about the choice. But what that gives people confidence for is in the future that potentially there's going to be another rate cut. Most likely there will be more rate cuts to come. If people, 6 out of 9 people are, voting for it. So I guess that's the silver lining.
Today, the Reserve Board has confirmed how it voted. 6 supported the decision to hold, 3 against. They'll vote again in mid-August.
6 agreed on the hold. Ooh. Be interesting to see if there will be another rate cut this year.
The next shot at rate relief for Australia's 3.3 million mortgage holders.
I think it's all about the next quarterly inflation number combined with the labour market figures.
And Michelle Bullock.
It's interesting. It's interesting, that's for sure. Yeah, obviously most people in Australia have a mortgage. And, you know, there's a lot of mortgage stress going on at the moment. We've discussed that a bit on the channel. And a lot of people are actually regretting buying their house. We'll get into a video a little bit later on about it. Like, there's an increase in the amount of people that are actually just selling their houses to go back to renting because it's actually cheaper to rent, which is crazy to think about when, you know, so many people can't afford rent. And it's mainly younger people and people with families that can't afford rent, maybe on one income, because it's unrealistic. Like, you can't survive in this economy on one income anymore. Like, yeah, you need roommates, you need a partner. It's not possible.
Was pressed herself on how she voted in today's decision. She wouldn't say, but the fact she released that 6-3 vote is telling. It's a message that the board itself had to wrestle with this. This was a line ball decision, and we can read from that, of course, that it's more likely that there are rate cuts in the pipeline and coming. Some consolation, but perhaps not great satisfaction for the millions who might have liked a rate cut today.
All right, let's get on to another video.
For a little more information to confirm that despite all four big banks and every economist and their dog predicting a rate cut today, the RBA stayed put at 3.85%. Now, I'm joined by our business guru, Matt McKenzie. Matt, WTF, I was already spending the money that I was supposed to save from this rate cut.
Well, you know, you might get one later in the year, but there are...
And that's the problem. He's not, like, I don't know if he's actually telling the truth about that, but he's not alone. Like, a lot of people have, you know, spent the money that they thought they were going to start saving. They bought a bigger house that they thought, you know, they could afford because they were going to be saving an extra $150 or maybe $200 a month, you know, but they ended up not.
RBA's view is there's no need to rush. And history shows once you've fought inflation for years and cost of living pressure, if you, what's the saying? Go the early dog, go the early crow. If you celebrate too quickly and you take your foot off the brake too quickly, things can go wrong very quickly. So the RBA is just being cautious. And to put it in their own words, they reckon they could wait for a little more information to confirm that inflation remains on track to get under control.
I think it's hard for a lot of Australians to understand why they didn't drop the rates further, because all we've heard for the past couple of years is about, you know, targeting this inflationary band of between 2 and 3%, and the annual inflation was 2.4%. And so I think everybody just assumed it was a done deal. Interest rates come down a little bit, and certainly the anecdotal evidence of the economy doing it a little bit tough, and certainly mortgage holders doing it tough at the moment, and cost of living crisis. For the average layperson, it does seem as though there's more than enough evidence to justify a rate cut. Would you say this is just, I guess, a reflection of, you know, the RBA under Michelle Bullock, the governor, of taking a sort of a cautious, conservative approach?
Yeah, I think it is a good time for caution, and there's probably 3 points to make. The first one is we've fought very hard as a country. We've borne a lot of pain to get inflation under control. So we've got to make sure it stays there. We've got to make sure it stays under 3%. And that's a reason to just be cautious about how quickly you cut interest rates. The second one is, the good news is unemployment remains very low. 4.1% is historically, it's not a record low, but it's pretty close to record lows. So that's a really good thing. So while the economy is weak, unemployment has been low.
I guess the good thing is, you know, we might as well endure another month or so of pain, or mortgage holders should endure another month of pain to, you know, ensure that we're not going to go back to where we were 2 years ago, where everything was just going crazy high, crazy fast. Like, everything was just going super expensive really, really, really quickly. But it is, you know, when people are doing it tough right now, you know, they want that relief now, and they don't really care about in the future. So it is tough. It is tough.
And so that means that, you know, that's something that's really important, right? You don't want unemployment to be rising. And because it's low, the Reserve Bank can feel a little bit more cautious. And the other thing is, this signal that they want to wait for a little more information probably suggests to you that they will be cutting later this year. They just don't want to rush it.
And in terms of the data that they're waiting for, the consumer spending data is coming a bit later in this month. Is that one of the big things that they'll be looking at?
Yeah, so that's one of them. The most important, I think, is the quarterly inflation numbers. So you made the comment earlier that core inflation was down to 2.4%. That was in May. That is based on monthly data, which is a little bit volatile and a little bit unreliable, and frankly doesn't actually cover every item. So they'll be waiting until the end of the month to get the more thorough quarterly data to get a fuller picture of what's going on. Sometimes the monthly data says one thing and the quarterly says something else. And you can imagine, I just saw an economist this morning, ANZ, predicting that core inflation would still be, I think, 2.7% for the quarter. If it's higher than expected, everyone would be freaking out if they cut interest rates. So that's why they're taking a little more time.
Yeah, and so I guess, going forward, in your experience, is it unusual to have a situation where, I think like 30 of 34 polled economists in some media analysis were predicting a rate cut, to have most people, the vast majority of experts, be so far off the mark? Is that a bit weird?
David Bassanese, who's from a company called Beta Shares, said yesterday that he found that consensus, the certainty, bewildering. And I agree. I don't think there was any reason why we should have been 90% certain, or 30 out of 34 economists should have been certain that there was a cut. I think sometimes you can have a little bit of herd behaviour among economists, and you might remember a few years ago.
At the end of the day, herd mentality affects everyone. We're going to watch a TikTok now. I'll quickly swap over to that. So let's have a quick look at this one.
Of seeing his mortgage repayments shoot up, Andy Barrows decided to sell his house and rent instead.
It's a massive relief. From 4 hours sleep a night, wringing my hands and worrying about the future and about the present, to waking up refreshed.
Just as he stopped working full-time, the Reserve Bank started lifting interest rates.
We were paying 30% more probably for our mortgage.
Andy is one of many Australians who decided to sell their homes in the past 3 years. The number of properties changing hands within this period has surged to its highest level in at least a decade. And the number of borrowers who are at least 30 or 90 days behind on their repayments is ticking up.
We have about 3.
See, that's a scary factor, right? People are actually falling behind on their mortgages, and what's that a result of? That's because of high interest rates, and people are bought, too much house, didn't think interest rates were going to go up, and they've stayed high for so long. And now that there's a sign of them starting to come down, people are, really getting excited about that. And this recent rate cut hold, I guess, is dampened a lot of people's mood.
1,000 customers in hardship. That's not quite reflecting the true amount of financial stress in the community.
That's because people tend to struggle with other bills first.
People are falling behind on council rates, utility bills, other debts like credit cards and personal loans.
The comparison website Finder has surveyed more than 1,000 people and found that 1 in 5 have switched to making interest-only repayments.
It makes your repayments lower in the short term, but in the long term it does increase your interest costs quite a lot.
Most borrowers have already transitioned to much higher variable rates. Many of them have been able to escape the worst of the mortgage cliff by selling their homes before they fall too far behind on their repayments. While that's keeping mortgage defaults low for now, many borrowers will face intense pressure to sell, just like Andy did.
See, it's tough. These people have got the Australian dream in terms of they bought a house finally, but yet they have to sell because they can't afford the repayments. So, that's the good old saying, house rich and income poor. Sadly, it's a real thing, and until interest rates come down quite significantly, they're pretty low. To be honest, in perspective, 3.85% is low, but people are used to 2%, 3% interest rates. And with house prices so high, you need low interest rates to be able for regular people to be able to afford the mortgage. On an $800,000 mortgage, you're looking at like $1,000 a week for 30 years. That's a long time and a lot of money to be paying. That's an income right there. So yeah, people are doing it tough, especially with mortgages. And yeah, I feel sorry for them, but at the end of the day, at least their house prices are hopefully going up. All across Australia except Melbourne, house prices are increasing, so that's the positive, I guess. If you did enjoy this video, make sure to like, comment, and subscribe, and I'll catch you guys in the next one. Later.